Welcome to This Explainer. Today, we're totally demystifying institutional trading by digging into the verified credentials of Professor Salahddine Krit. We're going to separate the myths of trading, the glamorous sports car renting overnight success stories you see online, from the rigorous, evidence-based reality. By digging into actual documented certificates, we'll find out exactly what it takes to trade at a true institutional standard. Here's our roadmap for today. We'll start with the professional trading standard, then look at why trading certifications actually matter. From there, we'll deconstruct the trading certificates themselves, pull out the key lessons from the journey, and finally, lay out your own trading learning roadmap. All right, let's jump right into Section 1, the professional trading standard, where we establish our baseline. We're anchoring our entire analysis in the verified academic and professional experience of Professor Krit. And let me tell you, he's not just a theorist. He completely bridges the gap between academia and live, breathing markets. As a university professor, researcher, author, professional trader, and educator, his background is rock solid. It proves that genuine trading credentials show highly practical expertise, not just some theoretical fluff. You literally have to execute in the trenches to earn these stripes. Think about it. When you're just demo trading or messing around with a tiny personal account, making a mistake usually just means hitting a reset button, right? But a professional evaluation, that's a whole different ballgame. It demands incredibly strict risk management, ironclad psychological resilience, and absolute adherence to institutional standards. The pressure is on, and the margin for error is razor thin. Moving on to Section 2, let's talk about why trading certifications matter, which is really all about the evidence of discipline. Earning these credentials means you've proven your performance consistency and your emotional control under some very strict institutional constraints. It's definitely not about getting lucky with a quick profit. It's about strict risk management and psychological resilience. When a professional firm evaluates you, they are hunting for trading discipline. They want absolute proof that you can maintain their standards day in and day out. It's about shifting trading from a total gamble into a validated, highly regulated profession. That brings us to Section 3, deconstructing the trading certificates, where we analyze the proof. Analyzing Professor Krit's verified evaluations, a very clear pattern of institutional milestones emerges. Whether it's an institutional prop firm making sure risk targets are met during an evaluation phase, or a funding body demanding strict capital preservation on a funded account, every single certificate is proof of consistent execution. Nobody is handing these out for one lucky trade. They're awarded for surviving the absolute statistical gauntlet of the live markets. At the very core of these evaluations are inner circle trader, or ICT methodologies. Surviving this level of institutional scrutiny means you've proven you understand how algorithmic price delivery actually functions and exactly where institutional liquidity is resting. If you want to trade at an institutional level, you simply have to understand how the big players move price behind the scenes. Mastering order blocks is also heavily validated here. An evaluated trader absolutely must be able to identify these specific areas of price consolidation. This is where institutions are quietly, patiently accumulating massive orders right before a major directional move kicks off. You have to wait patiently so you can trade alongside the smart money, instead of getting run over by it. Then we have another incredibly vital concept, the fair value gap, or FVG. These are specific price ranges where extreme inefficiency occurred during a rapid, aggressive move. When the market moves that fast, it leaves behind imbalances. Being able to identify these gaps allows evaluated professionals to map out inefficiencies in price delivery. You aren't just guessing out there, you're mapping out algorithmic inefficiencies for high probability execution simply because the market very often returns to fill those exact gaps. Beyond those specific contexts, achieving actual institutional funding means you have to seamlessly execute a huge array of disciplines. We're talking about combining precise trade planning with deep liquidity analysis. You've got to read the volume profile and the order flow like a book. You have to understand the nuances of futures trading and nail your exact position sizing. It is literally a masterclass in probability-based decision-making. If just one of these pillars falls, you fail the evaluation. It's really that simple. Let's pivot into Section 4, Lessons from the Journey, the Path to Mastery. The true progression arc of a professional trader takes serious time. Structured learning in the first month is really just setting the stage. From there, it takes about 6 months of deep, repetitive practice. After that, you're stepping into formal evaluations around the 1-year mark. But consider the longest phase, continuous improvement. Securing a certificate is definitely not the finish line. It's just a checkpoint in a lifelong dedication to your professional development. And here is the absolute most crucial point derived from Professor Krit's educational materials. Success in institutional trading is not about having a crystal ball. It is not about predicting exactly what the market will do next. It is all about unbreakable rules, extreme patience, and flawlessly executing your system. True discipline is what saves your account when your prediction is inevitably wrong. You absolutely must treat trading as a rigorous profession. If you treat it like a hobby, it will pay you like a hobby. Or honestly, it'll just cost you. Risk management is the bedrock of everything we're discussing today. Ultimately, it's your psychology and your emotional control in the heat of a live market that dictates whether you'll survive in the long run. Which brings us to our final section, Section 5, your trading learning roadmap, steps to institutional standards. Your initial foundation shouldn't start with trying to pass a prop firm evaluation right out of the gate. It starts at Step 1, mastering basic market mechanics and technical analysis. Once you have that down, you systematically layer in complex price action and ICT concepts in Step 2. By Step 3, you're reading actual order flow and volume profile. And then wrapping the whole shebang together in Step 4 is the protective shield of risk management and trading psychology. Following that technical and psychological foundation, the next steps map out the crucial transition into real-world execution. You have to begin with extensive backtesting, essentially proving your edge on historical data. Then it's on to live market simulation, where you treat paper money exactly as if it were real. Only then do you attempt professional evaluations. This path directly mirrors Professor Krit's own documented journey, leading ultimately to funded trading and that endless cycle of continuous improvement. So the ultimate takeaways from this explainer are pretty straightforward but totally vital. You have to prioritize skill development over chasing profits. The profits are merely a byproduct of executing the skill well. Practice consistently. Respect risk above all else, because capital preservation is your only lifeline. Treat trading as the professional academic discipline it truly is, and never, ever stop learning. I want to leave you with a final, vital question to think about. After seeing the academic and professional evidence, and after breaking down exactly what these rigorous certifications demand, how are you going to approach the markets tomorrow? Are you going to treat it as a gamble, or will you master it as a strict, evidence-based profession? The choice is entirely up to you. Keep learning, stay extremely disciplined, and thank you so much for joining me on this explainer.